Imagine dedicating your entire life to mastering the laws of gravity, only to wake up one morning and watch people effortlessly floating in the sky, pointing down and laughing at your foolishness for staying on the ground. That is the exact psychological torment currently tearing through the minds of the world's most brilliant financial analysts. We have abruptly entered a dark, chaotic era where mathematics is treated like an ancient myth, and where decades of deeply researched, battle-tested financial philosophy are being ruthlessly slaughtered by absolute absurdity. The market is no longer just shifting. It is actively, sadistically gaslighting everyone who still dares to believe in logic. What happens when the very foundation of everything you know about wealth creation crumbles before your eyes, replaced by a manic lottery driven entirely by internet jokes and anonymous rebellion? You are about to find out, and I promise you, the truth behind this new financial world order is far more terrifying and mesmerizing than you could ever possibly imagine. Financial Mindset warmly welcomes you to this deep dive into the beautiful madness of modern markets. Before we plunge into the dark reality of how the ancient rules of money have been permanently rewritten, please take a brief moment to hit that subscribe button. Your support is the vital driving force that allows us to keep decoding these complex financial illusions and bringing you the profound, unfiltered insights you need to survive. Picture this reality. It is 2 a.m. You pour yourself another cup of pitch black coffee, your bloodshot eyes glued to the relentless glow of your computer screen. You have just sacrificed hundreds of hours meticulously dissecting labyrinthine Excel spreadsheets, unearthing hidden details buried deep within corporate balance sheets. You have ruthlessly calculated every PE ratio, scrutinized the cash flows, and built incredibly complex valuation models, fueled by an unshakable, almost religious conviction in Wall Street's eternal promise, uncovering the undeniable intrinsic value of a business. With absolute confidence, you deploy your capital into a perfectly engineered portfolio, a fortress built on the bedrock of pure logic. Yet, as dawn breaks and the opening bell viciously cuts through the silence, reality delivers a brutal, soul-crushing slap to your face. You open your trading app only to watch your carefully curated masterpiece bleeding out, glowing crimson red like a catastrophic accident. Simultaneously, on your secondary monitor, a completely anonymous amateur on a Reddit forum casually uploads a screenshot flaunting a grotesque, mind-bending profit of 2,000%. What was his profound secret? There were no late-night financial reports. He simply closed his eyes, embraced the reckless mentality of the crowd, and dumped his entire life savings into the stock of a dying, bankrupt retail company because he saw a cartoon rocket ship on a message board. If you are sitting there feeling utterly betrayed, bewildered, and paralyzed by a profound crisis of faith in your own intellect, let me assure you, your rage is entirely justified. The modern financial machine is pulling off the greatest psychological manipulation in economic history, turning fundamental analysis into dust right before our eyes. Today, we are going to expose the unseen puppet masters of this new Wall Street and uncover exactly how the absolute laws of financial gravity have been destroyed forever. To understand how a cartoon rocket ship dismantled a century of financial orthodoxy, we must first examine the lethal weapon that completely replaced fundamental analysis: weaponized attention. For decades, the stock market operated like an exclusive, velvet-roped country club where the strict price of admission was a mastery of discounted cash flow models, proprietary data, and a lifetime subscription to Bloomberg terminals. In this old world, retail investors were nothing more than microscopic plankton, existing solely to provide liquidity and be effortlessly consumed by the institutional whales. But the internet did not just democratize access to information, it aggressively weaponized human psychology. We have crossed a terrifying threshold where we are no longer trading shares of tangible businesses. We are actively trading pure, undiluted human attention. In this manic new arena, a company's pristine balance sheet is entirely irrelevant if no one on the internet is passionately screaming about it. Virality has violently dethroned revenue as the ultimate underlying asset. When millions of disillusioned individuals, armed with government stimulus checks and frictionless, zero-commission trading apps on their smartphones, simultaneously realized that their collective buying power could overwhelm any billionaire hedge fund's short position, the entire financial game fundamentally fractured. It was a terrifyingly brilliant collective awakening. Money is, and always has been, nothing more than a shared psychological illusion. If enough people simply decide, out of sheer boredom or collective spite, that a bankrupt, decaying video game retailer is suddenly worth tens of billions of dollars, then reality must violently bend to accommodate that mass delusion. This is no longer traditional investing. It is outright financial nihilism. It is the primal scream of a generation that looked at the rigged, debt-fueled economic system they inherited and decided that if the game was fundamentally broken from the start, they might as well turn it into a spectacular, chaotic casino. The modern trader looks at a stock and does not ask how much cash the business will generate over the next decade. They ask how many viral memes can be generated about the ticker symbol in the next 10 hours. You cannot plug irony into an algorithm. You cannot build a predictive risk model to account for sheer, unadulterated spite. The market has morphed from a rational weighing machine into a deeply emotional voting machine, and the voters are anonymous, erratic, and utterly ruthless. They have replaced the careful, generational accumulation of wealth with the intoxicating, dangerous rush of collective mania, shifting the power dynamic of money forever. As this tidal wave of weaponized attention flooded the global exchanges, the self-proclaimed masters of the universe sitting in their glass towers suddenly realized their invincible fortress of algorithms was built entirely on sand. For generations, the elites of Wall Street relied on a supreme, almost arrogant confidence in their proprietary risk models and Ivy League pedigrees. They genuinely believed they had mathematically caged the market, taming its wild historical swings with complex derivatives, dark pools, and high-frequency trading bots designed to legally front-run the general public. But these sophisticated, multi-billion-dollar models shared one fatal, catastrophic flaw. They were rigidly programmed under the naive assumption that market participants are inherently rational actors seeking to maximize long-term profit. They completely short-circuited and collapsed when confronted with a digital swarm of internet traders who were perfectly willing to lose their entire life savings just to watch a prestigious hedge fund burn to the ground. It was an unprecedented form of asymmetrical financial warfare that the elite never saw coming. Imagine a grand chess master meticulously plotting his strategy for hours, only to have his opponent casually flip the board over, set the wooden pieces on fire, and declare himself the undisputed winner to the roaring, deafening applause of millions of spectators. That is exactly the psychological trauma inflicted upon the institutional titans. They doubled down on their logical short positions, screaming into the void of television cameras about fundamentals, revenue multiples, and impending bankruptcies, completely blind to the fact that they were no longer fighting a mathematical battle. They were caught in the crosshairs of a cultural insurgency. The resulting historic short squeezes were not just statistical anomalies or brief market glitches. They were violent, unprecedented transfers of wealth and power that permanently shattered the long-held illusion of institutional invincibility. The so-called smart money bled out billions on live television, trapped helplessly by their own rigid adherence to outdated textbooks, while the dumb money laughed all the way to the bank, dismantled empires with a keystroke. It was a profound historic humiliation that brutally exposed the inherent fragility of the entire global financial architecture. It definitively proved that when the anonymous masses coordinate their chaos, all the theoretical degrees and supercomputers in the world cannot save you from the unpredictable, destructive wrath most highly educated men in the room get financially slaughtered by teenagers operating from their childhood bedrooms, forces every serious investor to confront a terrifying, deeply philosophical question. What does value even mean in this reality? As someone who has dedicated their life to the traditional principles of investing, this is the exact point where your soul truly aches, and a profound intellectual depression sets in. You are forced to mourn the death of logic itself. We were all religiously taught that a stock is a fractional ownership of a living, breathing enterprise, firmly tethered to the earthly realities of supply, demand, revenue growth, and profit margins. But in this bizarre, hallucinatory new epoch, that rational tether has been violently slashed. We have completely and unapologetically decoupled asset prices from fundamental reality. Value is no longer a mathematical absolute waiting patiently to be discovered through hard work and analysis. It is a fluid, mimetic mirage entirely created and sustained by collective belief. An asset is now worth exactly what the screaming crowd says it is worth, for exactly as long as they can sustain the hypnotic illusion. This is the dawn of narrative supremacy. If a charismatic billionaire executive can post a cryptic phrase at midnight and instantly conjure $10 billion of market capitalization out of thin air, then we are no longer dealing in the realm of economics. We are dealing in pure theology. We are actively witnessing the rapid financialization of faith. It is profoundly unsettling because it means the very ground beneath our feet is entirely subjective and constantly shifting. The painstaking, exhaustive process of studying balance sheets and earnings reports feels increasingly like studying astrology, a comforting, nostalgic ritual that offers the psychological illusion of control, but has absolutely zero bearing on the actual movement of the stars. The psychological attrition of operating in this chaotic environment is utterly devastating to the logical mind. It breeds a deep, creeping imposter syndrome in anyone who relies on historical precedent to make decisions. You begin to constantly question your own sanity, lying awake at night wondering, are you the only sober person left in a world entirely drunk on infinite liquidity? Or are you simply the stubborn fool who refuses to drink the water in the desert because it fails to meet your outdated purification standards? Staring directly into this chaotic, logic-defying abyss, we are faced with a stark, unforgiving binary choice. Stubbornly cling to the fading ghosts of financial history and drown in a sea of resentment, or learn to quickly swim in the turbulent, unpredictable waters of the new narrative economy. Acceptance is the most painful, yet absolutely the most necessary step for your financial survival. This realization does not mean you must abandon all sanity, burn your finance textbooks, and blindly throw your hard-earned capital at the loudest, most obnoxious internet trend you can find. That reckless path leads only to swift and certain ruin. But it does mean you must radically and permanently expand your definition of risk. You must humbly acknowledge that crowd psychology, sentiment momentum, and viral internet narratives are no longer fringe, temporary anomalies. They are now the primary, dominant engines of price discovery in the modern market. The new, undisputed masters of this game are those rare individuals who can seamlessly blend the rigorous, mathematical discipline of traditional risk management with a profound, almost sociological understanding of human behavior in the hyper-connected digital age. They are the new financial anthropologists who monitor the manic pulse of social media just as closely and seriously as they monitor Treasury interest rate yields. To survive and thrive in this unprecedented era, you must develop an ironclad, almost unnatural emotional detachment. You simply cannot afford the luxury of righteous anger or intellectual superiority when a fundamentally worthless, decaying company skyrockets past your carefully selected, perfectly rational investments. The market does not owe you rationality, and it never will again. Your monumental task is no longer just to find a structurally sound business. Your task is to deeply understand the psychological state of the herd that is pricing that business. We are navigating uncharted, treacherous financial waters, where the reliable compass of fundamental analysis is spinning wildly, violently pulled by the magnetic force of collective mania. But hidden within this beautiful, terrifying madness lies unprecedented, life-changing opportunity for those brave enough to open their eyes to the cold reality of what the market has actually become. Thank you for joining Financial Mindset on this profound journey through the looking glass. Stay vigilant, stay fiercely adaptable, and we will see you in the next deep breakdown of this relentless financial machine. The metamorphosis of the global financial system from a rational weighing machine into an emotionally charged voting machine marks one of the most profound wealth shifts in modern history. We have witnessed the irreversible weaponization of human attention, where internet virality and collective belief can utterly dismantle the highly sophisticated, mathematically rigid models of institutional Wall Street. This new paradigm forces us to mourn the death of traditional logic, as asset prices increasingly decouple from earthly fundamentals and tether themselves to the chaotic, fluid realm of narrative supremacy. However, mourning the past will not protect your future. The defining characteristic of this era is not just the democratization of trading, but the financialization of human psychology and faith. To stubbornly cling to outdated paradigms is to invite obsolescence and ruin. Instead, the modern investor must evolve into a financial anthropologist, synthesizing traditional risk management with a deep, objective comprehension of crowd dynamics and social sentiment. We are no longer merely trading companies. We are trading the fluctuating pulse of collective human emotion. Accepting this chaotic reality without righteous indignation is the ultimate key to navigating the abyss. It requires ironclad emotional detachment and an expansion of what we consider risk. While the compass of traditional fundamentals may spin wildly under the magnetic pull of mass mania, those who adapt to read the currents of narrative economics will uncover unprecedented opportunities in the very heart of the madness.